Hello everyone, welcome back to Upside Down Data. Today I want to talk about Bitcoin and some metrics that I'm using to try to understand Bitcoin's current price action. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So if you've been following the markets, you've been following Bitcoin, it's been quite a ride for the past month or two, right? You know, we had this really nasty downtrend that led all the way into January, where we found kind of, at least for now, our local bottom. And generally speaking, moving slowly up from there with some pretty decent volatility in the mix, right? You know, we had that big move up in towards the beginning of February, and then we ended up getting rejected off of about that 45K level, came back down. We're able to find a bottom at around 34K, and then we had another big explosive move to the upside that we're now slowly correcting off of. So I want to start by talking about the trend confidence indicator as an indicator we have here on the channel. And essentially what this indicator is trying to do is assess how confident we can be in a given trend or in the current trend. The way you read this indicator is that anything above zero is bullish, anything below zero is bearish. And the idea is that if you're in an uptrend and the TCI is green, that's a good thing. That means that the TCI has some confidence that you're in an uptrend and it's liable to potentially continue. Whereas if you're in a downtrend and things are red, or like here, maybe this is a better example, you're in a downtrend and things are red, that's bearish. That suggests that this is a downtrend and there's no sign of things letting up anytime soon. And so really with the TCI, when you look for these crossing overs of zero, these can be important to watch because the TCI can act as a leading indicator of trend reversals. You see this in the spring of 2021, where the TCI flipped bearish quite early on, actually, telling you that this uptrend was not very believable. There was a lot of doubt in this uptrend, as evidenced by the TCI staying below zero. And indeed, we got that huge capitulation then in May. But then the opposite thing happened in the summer. We were trending down over the summer, but the TCI flipped green well before, in fact, we ended up exploding to the upside, giving an advanced warning that this downtrend was not very believable anymore. There was doubt in that downtrend, and indeed, we then had this very nice rally off of that. And then it also is useful just to warn you about coming kind of intermediate downtrends, right? You know, like flipped red right after this correction here. We had more downside, and then it flips green as this upside continued. Flipped red here, and then stayed red all the way through until right before that big 10% candle day we had at the beginning of February. And what I want to talk about now is what the TCI has been doing since then. You'll notice we have not closed red since. So really we got this tiny little blip of red here, but that, you know, anything right around zero isn't really that diagnostic. Again, this is a continuum of confidence, so being right at zero doesn't really mean much. So I don't really take this little blip of red as being all that important. Really, we kind of flipped green right around here and more or less stayed bullish ever since, you know, right before that big 10% candle. And then we stayed bullish even through all the volatility and the big correction that came after that. We stayed green, and then that pre-staged this, you know, 14.5 or whatever it was percent candle to the upside we just had a few days ago. And now we're correcting back down. But you'll notice that we're still quite a bit in the green zone here right now. And this, I think, is bullish, right? Because when the TCI is above zero, that generally means that having a bullish bias, at least from this model's perspective, is justified. That this looks more like an uptrend than a downtrend, or at least there's no reason to doubt this uptrend yet from this model's perspective. Now, one of the things that's nice about this model, so this is a machine learning based model, but you can actually probe it to basically ask it, you know, what are you looking at? What are some critical levels you're watching? And this is the current price level that the TCI is watching in terms of where it will then flip bearish. So if price were to drop below 37.5K-ish, that's where the TCI would flip bearish. So we're still a good ways off of that right now. We're trading, again, as I record, we're at around 41.5K that we're trading right now. So this is still, you know, this critical level is still a ways below that, but just something to watch. And so really the idea is that if we can kind of catch support above that or move up beyond that, the TCI will see nothing to be concerned about from that perspective. It's only if we drop below this level that it's going to get more concerned. Now, obviously, the closer we get to that level, the less confident the TCI is going to be. because obviously it's going to be starting to think that this uptrend might not be able to continue. But for now, that's where it is. And it's also interesting that it's actually raised its critical level from before. So it had been down at around 37K, a little bit below in the prior few days. It's now raised that critical level, meaning that it basically thinks that Bitcoin needs to hold a slightly higher level for us to remain bullish here, which in some ways I think makes sense. So this is one indicator I'm watching, and so far it's been calling things fairly well, right? You know, the fact that it didn't flip bearish, and we got this nice move to the upside. You know, from its mind, that was totally within reason. That was totally expected. It did not think, as long as it stayed green, it thought that we were more likely to be in an uptrend than a downtrend, basically, or that upside was more plausible than downside. So we'll have to watch this and see how it goes, see what happens. But I think this is a hopeful sign right now that we're still in the green zone on the TCI. Okay, so let's flip over to some other charts. So here I'm on lookintobitcoin.com. This is a great site that has a bunch of other indicators and metrics that you can look at. What I want to talk about next is the Fear and Greed Index. I find this to be another one that's kind of useful in the short term to maybe gauge where we are or how sustainable an uptrend could be. So if you're not familiar with the Fear and Greed Index, it's basically trying to gauge sentiment in the market. So, you know, obviously, fear, obviously, when everyone's fearful, greed when everyone's greedy. And generally speaking, you know, you kind of want to be the opposite of what the market is, or at least that's kind of like the general heuristic, that when everyone's greedy, you want to be fearful. When everyone's fearful, you want to be greedy. Obviously not financial advice, but that's just the moniker, the motto, the rule of thumb that people use for sentiment. And so what I personally look at with the Fear and Greed Index, and what I think it's useful for, is gauging how quickly sentiment is shifting based on what Bitcoin's doing. And there are a few reasons I think this is important. So with runs to the upside, or with moves to the upside, they tend to be more sustainable the longer that people are doubting the move, right? If people are getting too greedy too fast, that can cause problems, because what can happen then is people will come in and start using massive leverage to the long side. So they'll be betting on price going up using really high leverage. And then that can lead to leverage liquidations where the price moves against them too much. Or if some bigger players decide to dump a bunch to force liquidations, then that can end up leading to a bunch of selling pressure that can dump price down and can really kind of stop uptrends in their tracks if that ends up happening. And so really what you want in an uptrend for it to be more sustainable from that derivative side of things is for people not to be dumping in a bunch of longs. In fact, you actually want people to be going in short. So what happens is if people are betting against the market and they're going in, then what can happen is if the price moves up against those people, they can get liquidated, and that can actually create buying pressure that can send price higher. So that's one reason why disbelief can be a very useful thing. The other reason that it can just be useful is that, you know, if there are people who are watching sentiment and trying to sell when they think people are getting too euphoric or too greedy, you know, obviously you don't want the broader sentiment to be shifting too much, because then they might do that. You know, you might argue that's part of what happened as we went up into these points here. We got a little bit too greedy, too euphoric, and then people took some profits and crashed us. And then also there were a bunch of long liquidations that led into these big falls to the downside. So we're currently at 33 right now out of 100. So we are in the fearful zone, but not extremely fearful. But I think this is a good thing, because actually in this kind of run, after we had that huge candle to the upside, we'd actually gotten up to a score of 51, you know, at a price of a little over 44K. You know, now we're at 41K and the price is already down to 33. I see that as being a good thing. Frankly, the longer that we can spend time in these fearful zones, the better. The further up I think we'll be able to make it before we have to stop and catch our breath. Now, of course, with the Fear and Greed Index, there will be times, like these parabolic runs, where the market can sustain super high greed levels for a really long time when you're going parabolic. But really, I don't think you can bet on that happening, right? Because these kind of parabolic moves tend to be more rare than these kind of incremental moves. You know, I wouldn't be getting too expecting, especially right now in the broader macro conditions, for us to just go on a parabolic run right now. I really don't see that as being very plausible. So personally, I do not want to see us getting into these higher greed level zones anytime soon. I want a slow and methodical move to the upside, and to keep as much doubt and fear in the market as possible in some ways. It sounds kind of weird to say that, but you want disbelief, or at least I want disbelief. That's what I'm looking for. The longer that people disbelieve it, the less likely they are just to go leverage themselves like crazy to the long side and risk the uptrend stalling out, or for people to get jittery if they think that everyone's getting too greedy and they might want to start taking profits at those points. So that's just one thing that I'm looking at here with the Fear and Greed Index. 33 is good. I personally like to see it lower. And really, if we can be, let's say we're holding support at 40K and then we get back to extreme fear, I see that as being very bullish, because then we'd be at extreme fear at higher prices than we were when we were at those same Fear and Greed levels back down here. So that's what I really would like to see. And so with this correction, in some ways, I don't see this correction as being a bad thing we're experiencing right now off of the 45K. As long as we can hold a higher level of support, say 40K, then I just see that as being an opportunity for us to kind of let fear reestablish in the market, let more people jump in on the short side to get squeezed out to move price higher. So let's talk about another indicator as well. And this is the last one I wanted to touch on. This one's less of a short-term indicator, so I kind of see the Fear and Greed Index as giving a lot of information that can be useful more in the short term. And the TCI is kind of a mix that can give some useful short-term information as long as just kind of wider kind of trend information. But this reverse risk indicator here is much more of a macro-focused one. But what I really just wanted to talk about is where if this indicator looks like we might be at a bottoming out point, or just what it's kind of suggesting about the market. So if you're not familiar with this indicator, it's basically trying to assess long-term holder sentiment. So people who hold their Bitcoin for longer periods of time oftentimes are better at navigating tops and bottoms than the shorter term holders. So essentially when the sentiment is, so when the value is low on reserve risk, that suggests that these long-term holders are forgoing the opportunity of selling now and they're waiting for higher prices. It's basically suggesting that they are confident higher prices are to come, so they're not going to sell at current levels. Whereas when we get to these high points here, that suggests the opposite. That suggests that the long-term holders believe that the price is likely to fall in the not too distant future, so they're going to take their opportunity to sell now. They think this is a good selling point. So it's really just sentiment. Do they think it's a good selling point or a good holding point? And so you can see it does a pretty good job of tracking kind of these bottoming out points, these bear markets in Bitcoin's past, as well as these moves to the upside. Although this move didn't end up getting up to the red, it still did get a bit quite elevated off of these bearish periods. Now, one of the things I've mentioned before, and I'll say it again here, but then I'll get to kind of my main point. One of the things that's been interesting about this metric is that for the first time in Bitcoin's history, price has been going up, right? So ever since the summer, we've been putting in a higher high than the summer, at least so far. The summer being at 28K roundabouts. We were putting in our higher low, setting higher lows. Our higher low here potentially at around 32K or 33K in January. So price has been moving up overall, but you'll notice that reserve risk has been going down, suggesting that long-term holders think that price is going to go higher. They're foregoing the opportunity to sell at these levels because they think that price will go higher and it'll be worth it for them to hold on to it, suggesting that they are confident in higher prices. And they're getting more confident in higher prices as price has been going up overall. If we zoom in here, this has been trending down as price has overall been trending up from the summer. I think that's kind of remarkable because that's never happened before on this metric. Every other time reserve risk is falling, that's while Bitcoin is in a downtrend. And then reserve risk starts coming back up as Bitcoin goes into an uptrend. The first time that I've been able to find on this metric where we get this kind of clear decoupling of price action moving up, but then long-term holder sentiment actually getting better, or at least in terms of them getting more likely just to hold and wait for higher profits. Now, the thing I also wanted to mention about this metric too is, you could make a bearish case for this. And you could say, like, well, Mark, look, every single time we've gone into the green zone, that's been going into a bear market. So isn't that really bad that we're now re-entering the green zone? Doesn't that mean we're going to spend a long time down here before we go back up? Obviously possible, maybe. But what I do want to note is that even if we do have more pain to come, even if we aren't going to be able to sustain this current uptrend we're in, generally speaking, when you look at when the reserve risk has fallen into this kind of green zone that's identified here, most of the pain has already been realized off of the top. So for example, coming off of the 2013 top, we were up here at about over $1,000, so $1,100. We look at right around that point where we ended up going into the here into this bearish condition here, price was at around $400, a little $300, which is a huge drawdown, right, from the all-time high. Well over 50% drawdown from the all-time high. And we did have to go back down to the 200 level off of that level. But really, most of the pain had already happened by the time we dipped into the green. And the same thing happened here in 2018. We're coming off of, around 20K on the high. And then we're up at around 5K or so, then dipped down. It's probably around 4K or so when we actually broke through here, down to around 3K when we found the bottom for this particular bear market before moving back up. Which is, again, not great to experience that, but it's not as bad as going from 20K down to, around 5K. It's not going to be quite as big of a drawdown. So most of the pain had already happened by the time we entered the green zone. So if that's the case again here, we had a pretty big move down from the all-time high, about 50% move down from the all-time high. If that same pattern were to play out again, or even if we do go down to the green zone further here, if we continue with that trend where most of the pain has already been realized by the time you enter the green zone, then maybe we don't have to worry about another 50% move back down to the downside. More downside could happen, but maybe it wouldn't be as bad as some people are claiming, saying that Bitcoin is going to go back down to 10K or lower, for example. If historical trends continue, this might suggest that even in the worst case scenario, maybe that's not going to happen. Obviously, barring any kind of black swan event or like a stock market collapse or anything like that. If we're still playing in the same kind of ballpark that we've been playing in for the lifetime of Bitcoin. So obviously that's some questionable speculation. Who knows? These trends are just from two kind of prior market cycles. You could also call this a short bear market, but that was so short that maybe it doesn't really count as much. But really, what I'm just suggesting here is that by the time we get to reserve risk being this low, usually most of the pain has already happened. Doesn't say that more pain can't happen, but usually most of it has happened. And certainly it seems totally reasonable to me that this could be a low point before moving back up. Could we get some kind of a move like this out, just dipping in right back out? Very possible. Obviously, market conditions are very different from what they were back in 2011, so take with that with a huge grain of salt. But I think it's totally possible that we could bounce off of this and move back up. But it's also possible we can move back down. It's just that my base case is that most of the pain has already been realized, at least just looking at this from a historical perspective. All right, so obviously those are my opinions. You should interpret the data as you see fit, but I just think these are some interesting things to think about. So from the TCI's perspective, it's very plausible that this uptrend we're in could continue. Doesn't mean it has to be the one that takes us back to all-time highs, but maybe it's one that takes us back to more of that relief rally everyone's been waiting for. Maybe back at least to the 50K range or something like that. Fear and greed index is looking good. I'd like to see us just hang out as much as we can in these fearful zones as price. If price continues to move up, I'd like us to stay down in these lower levels. And then from a reserve risk perspective, even if we have to keep moving down, I think most of the pain will have been realized, but also this would be a plausible bottoming point from this metric as well. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the TCI and the other metrics, we're all going to make it.